Yo, good morning, everyone, and welcome to the Morning Market Report. As the thumbnail says, is QE in the room with us right now? No, it's not. Quantitative easing has ended, but we're going to break down today what QE looks like and why this $13.5 billion that was just injected into the markets is nothing beyond the norm. It is not quantitative easing at all, and a lot of people are mistaking that. So we're going to explain that today. But we did talk yesterday that we had a big signal saying we are probably going to see some upside movement on Bitcoin, and that's exactly what we've seen. A lot of the alts moving along with it, and we are currently up today almost a full percent on the tech side for the Nasdaq. You can see that right there above my head, nice and green across the board on the Dow Jones, S&P, and the Nasdaq, all up here looking great. So, guys, not saying that. Look, there's no quantitative easing coming. Okay, it is going to happen. When it happens, you will know. But what I will say is that we are seeing a situation where a lot of people are mistaking what is QE, and I want people to know, because knowledge is profit, right? So, guys, we're going to break all that down. Take a look at the Bitcoin chart, see why I'm talking about 94,000 might be the reversal point on this pump, where we do see rejection, maybe 100K. We'll talk about that, show that chart. And we got a lot of stuff to break down for you guys today. So you guys know what time it is. Go ahead and take your seats. Get your notebooks out. Class is in session. Let's get it. No OC today. He's still gone. There we go. Brought to you by Chart Prime, where he's working right now diligently, still swamped in the support side. So still no OC guy. It's solo show with Army Piper. So that's okay. We'll make it through. Let's go ahead and jump over and give a shout out to the chat. We got Alexandra G, the mod queen, in here. Appreciate you being here. Calvin Lamont is evidently in the house. And that's my dude, man. Love that guy. Fellow battle buddy. There we go. Let's get that in there. Maybe I just didn't see him because of that. It's probably why. We've also got Harp in here with us. We got Jesse Gellick in the house with us. 8 Breath is in here. Lunar Beaches Crypto. He said, hey, I was promised QE. Quantities tightening has ended. Yes, quantitative tightening has ended. I believe that's what you were saying there. But yeah, shout out to you, man. Calvin Lamont in a deer stand. What's up? Get you some deer. Give me some venison jerky, bro. Username joining us in here. All Set is in the house. Offshore Miner in here. Bingo Bango Trade Intuition in the house. Appreciate you being here, bro. Who else we got? Crypto Coin Mindset. Mike Vollmer, the Mod King. Not to be confused with the Mod Queen. She's still a #1, Mike, just so you know. I gave you a wrench, but not the golden wrench with gem encrusted. It's worth like 3 Bitcoin. That's reserved for the Alexandra G. She said the top is in. And I'm very sure that the top is in about 85%. Is there a chance we could go back? Absolutely. It's crypto. Anything's possible. We do have a big announcement coming today, coming from Trump. So we'll see what that is. Who knows with that guy, right? Who else? Did I miss anybody in here? Robert Mulligan. Good morning, Army Piper OC. If you're with us today, good morning to you too. No, he's still swamped over there, man. I wish he was back. I missed my sidekick on here, man. But yeah, we're gonna continue on. We're gonna rock it. Come back. French toaster in the house, and Berkoshi no dinero. Even when your name doesn't say it, we know who you are, Berkoshi. Dave Digital, I'll send you a voice memo of my pronunciation. Dave Digital, double D. Dave Digital said it over on Alex O's show. I watch it every morning, as you guys know. And he said, look, just listen to Piper. If you don't understand things, you should be listening to Piper. And, hey, I get 33 people showing up and 18 likes for what I put out. But I'll still do it because you guys, I would rather have a small circle of people that I like as opposed to a bunch of noise of people that are just here to create noise. So I'm happy with my small little family. Let's go ahead and get into it, though. I want to talk about the chart, and then we'll get into on the news side. Let's go to the charts. That's not a chart. That's a chart. Bitcoin. Yesterday, we talked about the weekly reversal that we were printing. There you go, reversal on the weekly. And I said it is possible that we come down to hit this dynamic reactor sitting at about 77,250, 77,500 in that range. That would be even more bullish for me. But right now, we do have a reversal. These can play out where they pull back a little bit and then move up. But overall, weekly reversals tend to do quite well. And what do you know? There it was yesterday morning. We were down here, and now we have pumped from that call yesterday. We have pumped About 7.5%, 7.6%. Not bad of a move there. What I'm watching here is that we do hit up here in this level of the dynamic reactor and the quantum reactor overlapping. This is going to create a big resistance area. How has this played out on the 4-hour here previously? Well, let me show you. There's a play on the dynamic reactor there. There's a play on the quantum reactor there, and this thing is still red. So given that this quantum reactor and dynamic reactor can play so heavy as a rejection zone, I am thinking that inside of the golden pocket, which would make sense to see, because we did get a bounce in the platinum pocket, another bounce off the 786. It would make sense that we go into this range and hit the 618 to the 0.66, which is a golden pocket rejection. Typical thing that we see once we come into the platinum, we come up, reject off of the golden pocket, and then down further, right? I am watching that we do come into this range hitting these two massive very elastic, rubbery rejection ceilings, right? That we've seen play out, and that would be about $92,000 to $94,000. Now, if we do break through that, what I would be watching from there, bullish scenario. We come in, we get a lot of fighting in here, but we're able to get on top of these, and we get a bounce off of that heads to the 50. We got a previous zone back here of resistance. Okay, it used to be support. Now that would be the 50. Something to point out on this though. If we reject from underneath off the 50, we tend to head much lower. It's a very bearish thing to happen there. You can drop the pie bears in the chat for that one, but that would be what I watch there. If we are able to get a bounce on this, would be, do we get a rejection at $100,000? Which is why I say best case scenario in this that doesn't change. Are we in a bull market now, or are we in a bear market? Is the fact that that would be a nice relief rally. It would put my total Bitcoin holdings back in profit because I started my DCA at the very top. I sold at 126 and started DCAing again. So I've been accumulating every week based on the dynamic Piper plan for that. And my average right now is like $98,046. So that would put me in profit on that. I would probably see what happens if we start to bring this down, remove some of that dry powder off the table so that my average is still in that $98,000 range. However, I'm keeping more dry powder for those lower moves. So that's what I'm watching on the chart right now. We'll get into some higher time frame stuff here in a minute on that. But let me go check the chat over here, see what you guys are saying before I get in on the news today. And I did not set the news scene up, so we'll just do it here on the regular. I don't care. It's okay. Eric Wallen, is Eric Wallen in the house? I think he might be. Might be. He said Eric in a wave. Pretty sure he might be in here. I don't know. Anybody, if I missed anybody in the chat, Andrea, I see you there. Appreciate you. And Dave Brumbelow, I think I see him in there now. So shout out to everybody that's joining us. We've got 54 people in here now watching. So you guys are awesome. Let's go talk about the news and get in on that. And then we got to break down 3 different charts, actually 2 different charts, and what is quantitative tightening versus quantitative easing, because, hey, that stuff matters. So, news, that's where we're going. We're going to the news. Okay, looking at the dashboard here into the Cryptoverse for the metrics today, guys. Where are we sitting at on the crypto market cap? Total crypto market cap sitting at $3.036 trillion. Current trend line continuing to rise is at $4.754 trillion. Currently undervalued on the total crypto market cap at 36.13%. What's up? Shout out to Mark Dutch. He said Andrea sent me here. She promised me white papers and a headache. Well, welcome. You get the headache. I see Eric Wallen saying I'm here. I appreciate you, man. Okay, so yeah, 36.13% undervalued right now on the total crypto market cap. Looking at the current risk levels, we're at 42% right now, which is still a 3x DCA. Putting this down into the threes. This is the chart that we do this thing off of, guys, if you want to see it here. This is the backbone of the DCA Piper plan, and then we got a whole risk levels thing. There's an entire PDF on this in the Discord, so make sure you get in there and take a look at that, because this is going to set you up for astronomical run up for gains in the next cycle. So not financial advice, just how I'm doing it. And if you want to follow, you follow along. Looking at Bitcoin dominance right now with stablecoins sitting at 58.85%. Take away those stablecoins, Bitcoin dominance is sitting at 65.4%. I still think we're going to see 70% on this when we When we are nearing that point where, okay, guys, you might want to consider moving and shifting. It'd be, I think this thing's going to be around 70% when you take away stable coins. Let's go over here, take a look at X marks the spot. And this is going to start in on the quantitative easing. So let's move down and we'll come back and talk about that. I do think we need to discuss this because strategy could sell Bitcoin. You know, the guy that said never sell your Bitcoin? He's actually said that they might have to sell Bitcoin if their stock falls below its Bitcoin value. We would do that because that's in the best interest for our shareholders. And I talked yesterday about the valuation of Bitcoin. Is it in here still? Maybe not. I may have taken it out. Yeah, I had to take it out because it was talking about the valuation of their Bitcoin is worth more than their stock right now. So I don't know, man. If the Bitcoin, if it inverses and Bitcoin becomes cheaper than their total stock value, Michael Saylor has said that he will have to sell that, sell his Bitcoin, sell some Bitcoin, not all of it. So forget the McDonald's job, crypto bros. It's time to get a real job. If you guys are wondering, we always talk about jobs on here, but I found this video interesting. Let's see if I can get it to play here.
Contractor. I have a high school diploma.
Oh, of course, you're going to mess with me, aren't you?
Almost $1 million a year. Me, myself, I bring home about $250,000 a year.
A plumber.
You have your own business?
Yes, I do. Revenue first year, I think it was about $689,000 first year.
How much you make now?
Average probably about 1.2. Profit margins, man, it's very good, I can tell you that.
I'm a journeyman lineman. I do the power lines.
How much you make?
I'm about 250. If you want to work more, like I'm in management, the guys that are actually working right now every day, they're making close to 500. We had one guy last year make 499.
I'm an HVAC technician. I'm in the union and I'm going through the apprenticeship right now. So I'm a second year, and I learned there, and I learned from my journeyman on the job site. So right now as a second year, I'm making 36 an hour, but in 3 years when I journey out, I'll be making over $60 an hour.
Shop, yeah, we do brakes and alignments. Gross in my business probably like 1.4.
It's like the profit.
Like about 350,000.
Car shop. How much you make a year? Over 200 grand.
Journeyman lineman, yeah. Base pay for journeyman lineman is like 140.
We do mostly sewer engineering in the street. We do a couple $1 million a year. You want to start working, get into a trade, either electrical, HVAC, plumbing. AI will never take over that.
Yeah, I thought that was an interesting video when we're talking about the job market, but you got these guys out here just crushing it with some great paying blue collar labor work, man. I just think a lot of people just don't want to do it anymore. Taking a look at how the jobs are looking, because I wanted to lead in with that. Here we go. U.S. unemployment rate will keep rising. The gap between Americans saying jobs are plentiful versus hard to get fell to 9.7% in November, near the lowest in 4 years. Perception of the job market has consistently deteriorated over the last 3 years. Historically, this metric has been one of the earliest signals of rising employment. Meanwhile, continuing job claims reached 1.96 million jobs in the week ending November 15th. That was the third highest that we'd seen since November 2021. To put it simply, finding a job in the U.S. is still becoming more difficult. The Fed has no choice but to cut rates again, and we will see rate cut. I am pretty sure of that. But yeah, just hey, if you guys are looking for new stuff, go out there and check out some of these trade schools. There's a lot of journeyman type or apprenticeships that you can get in there and learn from journeyman. And Zach, my son, actually looking at one of those right now. So corporate side, how's that looking? Non-AI corporate distress is rising in the U.S. There have now been 9 Chapter 7 bankruptcy filings for companies with $100 million plus in liabilities this year. It's the 4th highest reading in history. This follows 13 and 11 large bankruptcies in 2023 and 2024. By comparison, the 2009 to 2010 period after the Great Recession, or while we were in the Great Recession, saw 18 such filings over the 2 years. 18. We saw 9 so far for this year, and then the previous year's 13 and 11. So we're seeing way more bankruptcies than what we saw back in the Great Recession right now. Chapter 7 bankruptcies represent immediate liquidation with no reorganization. It's a far worse outcome than your typical Chapter 11. Big difference between Chapter 7 and 11 there. Companies turn to Chapter 7 only when they cannot secure financing to survive a reorganization. So, recent cases include subprime auto lender Tricolor and tech-enabled hotel chain Sonder. U.S. bankruptcy pressure piling up. So, a lot of reason that we're seeing a lot of this unemployment. Meanwhile, in the unemployment side, or no, actually on the bank side, we just talked about banks. Unrealized losses at banks remains historically elevated. Unrealized losses on investment securities for U.S. banks reached $337.1 billion in quarter three 2025. This marks the 14th consecutive quarter of losses, matching the 2006 through 2009 streak. Furthermore, this figure is approximately 6 times higher than the peak that we saw in 2008. Such pressure comes as elevated bond yields continue to drag down the value of bank securities. Meanwhile, the number of banks on the FDIC problem bank list rose to 53 last quarter. Unrealized losses are a huge issue for banks right now. And I want to show you this picture. It's going to be this one here. Sorry about the flashbang, guys. And I'll move this over if I can, so I'm not in front of it. There we go. There we go. Perfect. So take a look at this. This chart here is actually showing you the job growth analysis over since 1950s. And there's some interesting data on here. Take a look at it. Each one of these is the gray boxes that you see as recessions. This is the start here of the job numbers. So you got the little box there, Fed hiking cycle. X-axis is going to be your months since the rate hike. So the bottom here is how many months since we had a rate hike. The line is going to be your job numbers. Gray box is going to be recessions. Okay. And typically when we hit zero on these lines, when we've gone below zero, we've gone into a recession. Okay. So where are we at right now with the recession? Looking at this historical data of non-farm payrolls. If you take a look back there, you see a clear rollover from solid and positive growth into negative on most of these, with the exception of 1966 to 1977 and the current 2022 to 2025. What does this mean for us? So 1966 to 1967 here, the purple line, this was a classic soft landing. It's the only one we've had going back here that was, okay, hey, look, soft landing, we're good, right? Move along here, nothing to see. Job growth showed a lot, but never really broke the hard zero. Then you get a decent reacceleration to the upside, right? And then things fell apart later in the 70s, which we know what happened there. That's when we had astronomical, I know, I can't do anything about this. I'm sorry. Can't make this dark for you. But then we had that resurgence of inflation in the 70s were a nightmare for inflation numbers. Looking at 2025 down here in the bottom corner right here, this is going to be our current cycle, and this starts the high post-pandemic, and it just bleeds lower and lower and lower. Guys, we still haven't hit zero on this thing. Keep that in mind. That's why we haven't had an official, hey, guys, we might be in recession. Crypto Princess sent me here. Hi, Crypto Princess. How you doing? Crypto Princess sent Crypto Princess here. It crashed into negative, but no classic recession. It hasn't crashed into the zero range, and so we haven't had the classic recession signal, and it hasn't bounced, though, with any new growth surge like we saw back here. So we're now looking at like 42 months since the price hike or since the rate hike, but no bounce has occurred at all on job numbers, continues lower. So why is this weird? And what's got, the permanent eyebrow raise going on is that we're posting the weakest positive job growth of any expansion on record. But the labor market is acting like it's a zombie economy. It's not booming enough to justify euphoria. It's not breaking enough to trigger classic recession calls. It just keeps recession watchers on the edge. And that's why there's so much uncertainty in the markets right now. It's creating massive uncertainty because if people are like, keeps going lower, we're going to hit recession, but we're not hitting zero, so we're not going to get a recession. And that back and forth is just fear, right? That's why we just continue to DCA. At this point, there's no way to predict what's going to happen. This thing could start bouncing from here, and we never hit a zero. And what do we get? A 1960 repeat where we never hit the zero, and we finally get a bounce up, even though we're about 22 months behind schedule on that. The markets are stuck in this. Is this it mode, right? Bears, any shock, and this goes negative, recessions incoming. Bulls, if this is all the damage after brutal hikes, maybe the economy is more resilient than we thought. So Policy plus market stay headline sensitive, and that's what we're seeing. Every little thing that comes out news-wise is causing everything to just dump, right? And or pump, really, at times that it shouldn't. Buy the rumor, sell the news is a common thing. So about 2 years after the Fed starts hiking, job growth usually face plants into negative, and that's your recession period. This time, payroll growth is just not giving us that. It's bleeding lower, but we're not seeing that. So I wanted to break this down for you. I thought it was a very interesting chart when you look at it historically at all of the job numbers, job growth, non-farm payrolls versus the hiking of the economy, hiking of the rates, and how that looks. So another one I wanted to talk about here is this other picture. Let me get this one down. No more white for you. This one's dark. Is that better? This one here is a very interesting chart too, because Lunar Beaches talked about this the other day. A couple of weeks ago, I guess, and he said, "Look, dude, all the money, large cap sector, tech, like all the money, the stock market is just like strong. It keeps making new highs. We're within 0.25% of an all-time high, like any given day, right? This is the S&P Mid Cap 400, which is your real economy. These are economy-based stock markets that are traded right on the S&P. So the white line, that's your S&P information and technology sector. And then your red line is your real economy. It's your more traditional non-mega cap companies that are typically the backbone of the economy and its health, right? So this metric is capital expenditures divided by depreciating expenses, capex and depex, right? So what we're seeing here on this is the so what. The AI data center cloud boom is heavily concentrated in your mega cap sector up here. That's where we're seeing all that money coming in. But it's not broadly spread across your baseline of your economy stuff, which is your real economy data. That can mean that growth and productivity may be very concentrated in tech, which is exactly what we're seeing. It's all in the top 10 stocks right now. But the headline market strength can overstate how healthy the broader economy is, because most capex is coming from small groups of firms. Big tech is going all in on building the future, while the mid cap real economy, the real economy stuff, hey, everything looks great, but how's it really looking? That's your real economy stuff there. They are under investing and getting left behind. So this is a red flag, and it should be a red flag for anybody that looks at how all of this breaks out on, hey, where's all this money that's coming from that's making the Big 10? Well, we already seen the circle jerk they have going on, and that large tech sector making things look a lot more healthy than what the real economy indicators are telling us. So, Adam, apples have feelings too. Apples do have feelings. Dutchy, this is the way. You guys are just talking away over here. I love you guys. You guys are awesome. Yes, Lunar Beaches, you said you were talking about this at one point when me, you, and BC Port Corp were on the phone, and you talking about where's all this, when I talked about where's the money going to come from, and you said, well, how are stocks going up? And that's where it's at. There you go. Lunar Beaches, I work in the real economy. I know the struggle. Yes, but you were questioning about why does the stocks keep going up when I asked where's the liquidity going to come from? It was a couple weeks ago, maybe a month ago, man. Do you have a flag? There you go.
Do you have a flag?
Maybe it wasn't you. Maybe it was somebody else. I don't know. I thought it was you, Lunar Beaches. I may be wrong. What else do we have in here? Well, let's talk about repos, because this is an important section here, guys. We got to talk about the repos. Oh, here's that thing that I was talking about on Michael Saylor having to sell. I do have it. It's up here. Absolutely insane. MicroStrategy's market cap is now worth $10 billion less than their Bitcoin holdings. So what would he need to do to sell? It would need to be the opposite, that his Bitcoin holdings are worth less than the share of MicroStrategy. Okay, MicroStrategy is down 12% today and 57% since October 6th. This puts the company's market cap at $45 billion. Meanwhile, MicroStrategy holds 650,000 Bitcoin worth about $55 billion. In other words, MicroStrategy's market cap is now trading $10 billion below their Bitcoin holdings. If you subtract MicroStrategy's current debt pile of $8.2 billion from their current Bitcoin holdings, this is from their loans and all that they owe out, they still hold $46.8 billion worth of Bitcoin. So MicroStrategy's net Bitcoin holdings are still sitting at $1.8 billion above their current market cap. Can Saylor keep on buying? And then, of course, we go into this. Michael Saylor said they might sell Bitcoin if their stock falls below its Bitcoin value. We would do that because it's in the best interest. Guys, that's what they're saying is going on already. So would this be the catalyst that ends the cycle like this? Hey, FTX failure, right? Luna failure, MicroStrategy failure. They start selling Bitcoin. I don't know. Just something to keep an eye on. And then here we go. Big announcement coming in today, 2 p.m. Eastern Standard Time today. President Trump says he will be making a big announcement. It's going to be big. It's going to be huge. It's going to be bigger than anyone thinks it can be. 2 o'clock today, guys. Be ready for some volatility there. And then here we go. Quantitative easing. Let's talk about this. Let's get my notes up here. And let's talk about good old QE versus QT and what really is going on here. Just in, Federal Reserve officially ends quantitative tightening. This is true. Quantitative tightening ended yesterday. Does not equate to QE, though. Take a look here. This guy here, Josh Phillip, he said, whoa, the Fed just injected $13.5 billion into the banking system via overnight repos. This is what people are talking about. And shout out to Alex, though. Love my bro over there. But he just talked about this on his show, too. And he's like, Piper, what do you mean there's no QE? $13.5 billion. This is not quantitative easing at all. The standing repo facility is an overnight loan facility. So yeah, sure, the cash gets injected for a few hours, but then it's paid back within a day at a 4% rate. People love to talk about liquidity injections. This is not the case at all. Let's go back over here. We'll bring out the chat cam. We'll talk about it here. So let's explain this and break it down. The QT, the Fed slowly selling and shrinking its books. You guys understand what that is. QE, the Fed starts buying and growing its books. Overnight repo is a very short-term collateralized loans. It's plumbing support, not a QE cycle. So looking at what the QE actually means, QE is large-scale, persistent net asset purchases. The Fed buys treasuries and usually across the curve. They purchase permanently. The purchases permanently increase bank reserves until later reversed. And then the Fed's SOMA security holdings. And if you guys don't know what a SOMA is, I talked about this earlier also. It's the System Open Market Account, okay? The Fed's big portfolio of securities that it holds. So when you see that SOMA versus repos, reverse repos are not put on the SOMA. It's just a overnight type thing, right? So we're in the flat balance sheet phase right now. QT is done. No declared QE program is running. The current macro liquidity picture right now, balance the Fed sheet for the balance sheet for the Feds is sitting at approximately 6.6 trillion, which is well below the $9 trillion peak that we had pre-COVID. But quantitative tightening impact, though, and reverse repos usage both have fallen sharply. We've moved from abundant reserves towards merely ample, and money markets have started to show strain. Policy rates, moving on from that, Fed funds have been cut off of the highs, but it's still restrictive in real terms. And what would we need to see to make it QE? So what it would look like, this is what you guys need to know. Explicit quantitative easing announcement. We will purchase X billion dollars of treasuries like they did in 2010, 2012, 2020. They make an announcement. We're going to buy this. It's not this reverse repos. When you guys see overnight or reverse repos, that is their maturity of bonds that they turn around and put back in, okay? That's normal operating procedure, and it's there for the banks, but they pay 4% on it too. Persistent net increase in the SOMA securities. We already talked about SOMA. So it's just not bouncing around from repos. It's them actually holding, and it starts to build up their book, which is currently, again, about 6.6 trillion right now. Balance sheet grows faster than their liabilities. In speeches, Fed officials have already hinted that eventually they'll need to grow SOMA again to simply maintain ample reserves, even without a crisis. So we would see it grow even faster than what we are right now. $13.5 billion is not the QE that we're waiting for. So right now we're at quantitative tightening. It's off. That happened. I will give them that. Quantitative easing, not officially on, not formally. We're not seeing any official announcements. People calling that stealth is still, they don't understand reverse repos. Transition phase, balance sheet is flat. Repo facilities are on standby and occasionally used to keep money markets from breaking. That's all, again, that's all they're doing. They're doing maintenance on the plumbing. They're not rebuilding the building, if you will. So if you're doing your macro narrative, accurate way to say it, we finished the drain phase. We're in a pause flat phase, and the next big pivot would be true quantitative easing, which would show up as sustained, deliberate expansion of security holdings. We are not there yet. So I just wanted to break that down for you guys so that you had a better understanding of what we're actually seeing out there on QE. And I know that's a lot to wrap your brain around, but they would make announcements, guys. Not it wouldn't be, hey, you know that thing that happens like every quarter where we do this reverse repo, or that thing that happens when we do our maturity of bonds and reinvest the money back into bonds because they've matured. That stuff is normal, all normal, not QE. So I just wanted to explain that to you guys. We need to see. We need to see that applying for multiple credit cards to max them out and then claiming bankruptcy and moving into Piper's attic. It's a great idea. Come on over, username. It's all good. I got my guy getting ready to start my attic here soon. So let's go take a look at what else we got in here. Crypto liquidations in the past 24 hours has hit $442 million, 124,000 traders getting liquidated. Total liquidations coming in again, 442, and a Bybit Bitcoin trade and resulted in a $13 million liquidation on a single trade. Let's go look at the crypto market today. Bitcoin is up about 6.3% on the daily. Ethereum is up 7.3% on the daily. XRP is up 6.2%. We're seeing good moves. Good moves. I like it. Solana's up 9.1%. Dogecoin's up 7.6%. Cardano's up 11.4%, still sitting at 41 cents. Shout out to A to Ace. He said he bought some at like 30 some odd cents. So he doesn't need it for the bag. He's not buying it for the bag. He's buying it so that he has cheap fuel for the Cardano ecosystem because he does a lot of really smart swaps over there. So Chainlink is up 9.3%, well below $800 Chainlink. You guys were lied to. Hyperliquid sitting up 10.3% today. What else we got here? Monero's down 0.1%. The privacy token play has seemed to have chilled a little bit. Zcash down to $348 after a massive 30% drop for the week. Still sitting up right now about 0.3% on the daily, 4.7 in the past hour, giving it that recovery. So this was sitting much lower in the 30s. So yeah, that is the end of that. Let's go over here and take a look at the stock market, give this a refresh to see how we're looking here. Dow Jones up about 0.15% right now. S&P's up about 0.25%. NASDAQ up about 0.6%. This has actually dropped about 0.3%. Turn the fan on. It's getting hot in here. I'm talking a lot. 0.3% since we started the show. Russell 2K small caps. This gives you a little hopium on your alts. When you guys see small caps start to move, it's usually a good sign for crypto, and they were at 0.67 today. The volatility index sitting pretty low, below 17 right now, so that's a good sign. Look at the bonds market. Hey, look, we're cutting rates, but your 10-year treasury yield's going to go up. So yeah, rates not getting any lower. You can double check. Are you sure Link is not at 800? Positive, Dave Digital. Positive. I was told 800 Link. I want $800 Link. Well, then you listened to the wrong people username. That's all there is to it. Someone said a Kramer flash. Oh, down here. Yeah. This is what you're talking about. Yeah, I'm on CNBC. Yeah, this thing just keeps going up right now. Gold, how's gold looking? Still holding $4,200, down about 1% on the daily. Silver, just under $58, down about 2%. Copper is down. Platinum is down. Palladium, the only thing green on the precious metal side here today. Let's look at the economic calendar, see how we're looking here. Give it a refresh. Anything come in today already? The Red Book year over year, 7.6%. Not any big deal here. The Red Book, though. The Johnson Red Book Index is sales weighted on year over year for the same store. So this is if the same store sold X amount last year, how'd they do this year in comparison? Red Book right now, 7.6%. And you can see on the chart, actually pretty good, the same stores. But that's because why? You have a lot of businesses shutting down the stores that aren't doing well. So obviously they kept the best performers, and that's why you're seeing that. there. Let's put this on an impact of 2. We don't have anything going on today, really. Fed Bowman's speech beyond that. Tomorrow, we are going to get the mortgage rate. I suspect that this might be in the like 6.45 range. It's going to be up slightly. ADP employment change for November. Guys, 42,000 jobs on the last report. They're expecting it to be as low as 5,000. Again, employment weakening out there, not a good sign. Eventually, that job number on that chart that I showed you might hit 0, and that means probably in a recession at that point. So keep all that in mind. Import prices, export prices coming in tomorrow. Nothing big to see there. We are going to get ISM services though, and this is expected to be lower than what we were previously at, meaning it's coming down too. We are going to get initial jobless claims on Thursday, and then Friday we're going to get core PCE. Guys, keep in mind this is from September. Okay. We're not getting any new data this is not October and November. This is not November and December. This shit is from September, dude. We are way behind on all of this data, but I will be interested to see how this comes in and what it tells us. This might be about the only data we get. The only jobs data, and unfortunately, I don't think it's going to be included in next week's FOMC. Next Wednesday, December 10th, is the FOMC and the rate decision. Tuesday, we're going to get JOLTS job openings from October. Kind of delayed. The JOLTS job openings from September is what we're going to get. October's has been moved into November's, which will come out after the FOMC. Make it make sense. So we will see this coming in. It's expected to be lower on new job openings there. And then the ADP employment change for the week was previously negative 13,000. So job market weak as hell. So that's what we have there. A chance of a rate cut right now, looking at like almost a 90%. I think it's like 87.5%. Yeah, 87.2% chance that we do get a rate cut next week on Wednesday. Probably going to be a 25 basis point if I had to guess. How are we looking on the quarterly here? Quarterly for Bitcoin right now, well, monthly, I should say, negative 3.2%. Put this on the quarterly and take a look here. Guys, it's right in line. Look, 2022, 14%. Okay, this was a bear market downside for the quarter. Okay, go back 4 more years here. Okay, and we were looking at 2018, 42% there. We're at 23.27% during the euphoria point of the cycle, not the bear market. So, not looking too good there when you look at that quarterly. But what about the stock market? What can we say about the stock market? Well, overall, why December is a time for winners on Wall Street. What can we expect this month, and what effect or impact will this have on crypto? This year's market winners should continue to outperform through December, according to Oppenheimer. Stocks had a rocky start at the beginning of the month, all lower on Monday. The Dow Jones, S&P, NASDAQ. Momentum names like Super Microcomputers and Broadcom fell nearly 3% in midday trading. However, December has been the best performing month of the year for momentum since 1928. Head of the technical analysis at Oppenheimer, Ari Wald said in a note last week, the momentum factor tracks the performance of market leaders versus the laggards over a prior 12-month basis. December outperformance suggests investors often look to sell losing stocks to offset capital gains tax liability, aka tax loss harvesting. They do that in December. The end of the year is typically when investors look to trim their tax bills by dumping underperforming stocks to realize capital losses and offset any capital gains. In addition, seasonal trends will be a tailwind to the overall market. We found S&P 500 returns in December have been higher when the index starts the month above its 200-day average, and that is currently the case that we're seeing. So we could see the stock market have a good move up in December. Will that translate over to crypto? A lot of times it does. So there you go. Let's go over, take a look at the chat and see what everyone's saying in here. And then we'll go look at the high time frame Bitcoin chart. Andrea, how you doing? No, Stan, he's having a conversation with his AI friends. I have no idea who Stan is. I don't know what's going on here. Appreciate you guys. I think that's about it. I don't think I missed anything. If I missed anything, I apologize. I was just going deep. I was going deep here. Opening the laptop can be a workout too. Facts. Facts, especially if it's a big laptop. Let's go take a look at Bitcoin's chart. Let's talk about Bitcoin's chart. Guys, we are pushing up here, continuing to push to the upside. We're above 90,000 now on Bitcoin. Again, 92K. I'm going to go ahead and throw it on here for you. You guys might want to screenshot this, just saying. I had this box on here before. This is the box to watch. That's going to be your rejection zone. If we get above that and break, you're looking at 100K. I'll put that on here for you too. We'll give you a nice arrow. How about that? There you go. Bingo, bango. So if not in here, then there. That's it. If this, then that. The one thing I do want to point out is on this chart here, and this is why I can't go full bull. I have to be pie bear. Drop the pie bears in the chat. Oh, username is Stan. Got it. Okay, good to know. Appreciate that. This is why I can't go full pie bull. And when that happens, I'll change an emoji out and put a bull in here for you guys. But this is the monthly on Bitcoin. You guys see the MVP oscillator crossing over to a bearish signal down here? Historically, was that, and then also the fact that we have a red histogram print, okay? Historically, this does not reverse back into green at all. Over the entire history of Bitcoin, we've never seen that. Matter of fact, we see continuations or we see a little wavering, which just created this little volatility point back here. Let me bring this into play. There you go. And you'll see right here, we still had a pullback on that red one from when it printed. It printed here. Nope, it printed here. We still had a pullback below that of 48%. That little wave right there, that little wave right there that did this little saddle shape, and you can see it better if I do that, that created a 47% drop on the market, okay? So if we look at the rest of these, guys, we've had massive dump offs. This one here was when we came back up and got our rejection there after a pump up right there. Had a pullback for about a 25% move up, and then it rejected again and that led us to a 57% drop. So the fact that we've turned red, never in history have we had a sharp turnaround on the markets ever. It's never done one red block and then immediately went back into green. Just doesn't happen. So at the very least, sideways with the potential of 40% pullback, that's got to be in my narrative, right? So full moon on Friday also. Hey, that one didn't play out last time. I called it quits. It works most of the time. It does not work every time. But so I am watching that, again, narrative, we pump up to here, right? Either rejecting this zone or this zone, but we continue seeing this red histogram play out, and it gives us more downside move, which potentially could break $72,000. We have got to change something that gives me this idea that, okay, cool. We are now looking at potential bullish structure, but right now, all the indicators are telling me, nah, bro, not fam. So I am watching that closely. Let's go take a look at NVIDIA today. We talked about this earlier in the week, and I said, look, we're coming down to the dynamic reactor. We're getting the purple nurple starting to print. We're in the platinum pocket. I would watch for this to come up and break into the Bravo band. What's going on now? Check it out. Bingo, bango, right out of the golden pocket. We do have a little gap down here that could get filled, which would give us a bounce in the golden pocket. Typically a bullish move. I do think that we are heading up to this zone right here, where there's another gap. This is coming in on NVIDIA between 203 to 206. Keep an eye on that. I am working on getting the whole list built in here for all of the AI plays so that you guys can, come play along with on the stock side. Look at that candle. Yes, sir. This looks like Alphabet. Google is getting ready to pull back. We're starting to get a purple nurple, and you can see when we get those, we do typically have some type of pullback. Not every time. Some of the times it's, very mild, if anything. But right now, it's 7, 8, 9 about to print. Take profit 5 from this buy indicator all the way back here in July. Hey, look, buy, strong buy indicator and a pump indicator, support on the Bravo 9, and up it goes for that entire run. We were now hit take profit number 5, has triggered on that right there on that candle. So be aware that if this pulls down and breaks below the cloud, we could see this flush out. Google might give you a buy-in opportunity there. So Alex O in the house. I see Alex O. Send it to Valhalla, he said. What's up, Alex? Oh, appreciate you being here, man. We talked about what QE is at the beginning. You should go back and watch it while we're not there yet. And what that $13.5 billion was, I explained reverse repos, Alex. Oh, I got you, bro. I love you, man. But yeah, that's what I'm watching there. Circle looking horrible still. Horrible, nasty, horrible. I might start buying this again once we confirm some bottom market, but right now we're still firing off strong sell indicators on Circle. Apple is another one that's working pretty hard to the upside right now. There we go. There we go. Getting a nice green candle today, breaking well above its Bravo 9. I will point out, though, that we are getting that strong buy signal here, hitting take profit 3. Could get a little pullback into the Bravo 9, giving you an opportunity to buy Apple there. But Apple's looking pretty strong, too. What about United Health Group? This is the one that we talked about way back in the day. And I said, hey, guys, this might be the time to pick this thing up when we were down in this like 300 range here. Looking pretty decent. Matter of fact, if I come over here, I think I got that on a chart where I talked about the buy signal. There we go. UNH, Platinum Pocket. There it is. That is where I said to buy. $237 on this. And then right now, we do have a strong sell indicator on it, and we are rejecting down. But it looks like we could be getting to the point where this is about to rally up again. Healthcare sector does pretty good usually during as a defensive play, and we are seeing that as a case. So if this gets a bounce here and is able to get back above its 200-day, be a very bullish thing to see. Still sitting well above that $230 range that we bought back there. So I might buy more if it pulls back a little bit. All right, guys, I think that's about all I got today. I know we're close to the end of the time here anyways, but I just wanted to give you guys a breakdown on the QE, QT. What is it? What is it not? It's not here yet. That's what it is. I wanted to give you an understanding of the current job market picture that we're looking at and how close we are to the job numbers screaming recession finally also. So keep that in mind. Keep watching that. Keep tuning in right here. We're going to keep breaking this stuff down for you. And watch that level at 92 to 94,000. If we find support there, maybe shoot along into the $100,000 range. I think it might play out well for you guys. But appreciate all you guys getting in here. Look, it was $10. I'll let that ride. Did I get did you send a super chat? I don't know. Did I miss something? Ban funding? No, I did not. Okay. I just making sure. I'd never want to leave you guys out, man. Appreciate you guys. So yeah, guys, we'll be back here tomorrow. The chart prime, yes, that was the chart prime MACD. It's called the MACD normalized lunar beaches. We'll be back here tomorrow. Hopefully OC's back tomorrow too. Hopefully we have some shows for you back here with Good Morning Crypto. But right now it's a one-man show, and I'm doing what I can to give you guys the alpha, give you guys the headlines, give you guys the news, the charts, and everything you need to have knowledge, because knowledge is profit. Until next time, guys, trade safe. Use some risk management. Learn about what qualitative easing is, and we'll catch you guys tomorrow morning. Till then, guys, peace, love, profits. Be kind to yourself. Be kind to others. Later.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done. You can't handle the truth. Emotional damage. We'll see you at the next one.
What the fuck they're doing.
Morning market report out. Boom shakalaka. We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. wow.
That was awesome, dude!
Hey, it didn't break. What else you got?